Good morning. A little corrective price action going on here for whatever reason. Well, reason being prices are at resistance over there to the left. So what's going on right now is pretty normal. We talked yesterday. Pelosi is the reason. Dan, as much as I want to agree with you, if she was the reason, the markets would be going through the floor to proverbial China. I know she's there, but the markets would be tanking. Something's holding this market up besides that hag trying to destroy this country. All right. I'm making my wife laugh. Why would they, McConnell? She's on their team. They're not going to shoot down her plane. All right. So what happened yesterday? And look, we talk here at Master Trader, we talk about charts are a picture of what others' beliefs and actions that they create with money. So we see, this bottoming action here that they were buying and prices moved up. And notice that each day here, markets are closing near their highs. Right here, backed off a little bit. Then we get a red bar. And okay, so what's it going to do? And it begins to back off a little bit, hits the 50, essentially no support. You go back and look at the videos here as it moved up. I know my comments would have been one in which I would have said it needed to create support, and it did. And then it continued to go higher. So yesterday, prices open lower, and you can see the opening price here. Prices gapped down, and sellers had the chance to move it lower, and they can't. And then it rallies, and then later on they lose confidence and it gets rejected. And so here now we are with a little baby kind of breakout failure situation, nothing too serious. But prices are gapping down right here below yesterday's low, below a green candle. So a little bit more bearish. Listen, I wouldn't count this out that it can't move back up again. So the ideal scenario, this is just, I don't have statistics, but just the ideal scenario of a turn happening, it encompasses most times 3 bars. I don't know, 3 bars or a shock bar. And this isn't a big shock bar because it only, I like to use the word, peekabooed above the prior high. It didn't extend above the prior high, say to get closer to the top of the range over there and get rejected. So it didn't get that far. Buyers weren't that enthusiastic, even though, intraday when it was going up at that time, it seemed like they were buying and, they were buying. It's just that eventually they just decided to, enough's enough. Risk is increasing enough to sell. So anyway, now it's gapping down here, and we're going to see how far this goes. There's a little unfilled gap down here, which you can see right there, kind of touch the top, but not much of a unfilled gap to really hang your hat on there. So potentially, and I don't think it'll happen today and what it makes me think that, because it would just be a pretty large bar to get down to this support at 400. Now, could it? Of course it could. What would be the motivation for sellers to be that aggressive today? I don't know. But ISM is coming out. Is that a 10 o'clock number or a pre-market number? I know that could be a market mover. I don't know if that's today or tomorrow, but there's some economic reports coming out this week to pay attention to. So what would be a normal downside move? I guess somewhere around here, 404-ish, give or take. There's some minor, just call it minor support there that you can see on the hourly chart. Yeah. So, we have it, and some stabilization at the moment near 408 at the bottom of that bar. And we'll see if it stays below. Well, I think it should stay below. Ideally stays below 410, rolls back over again. So we'll see how the the day chart progresses. What's the day chart? Day chart is forget all of this, and this is opening up down here, and it jiggles around below this level and then rolls back over again. And you go Dan's non-manufacturing index. Crude oil inventories, yeah, could maybe something. And so factory orders and that, those kind of things, is the economy slowing down? And of course, I think the markets would probably like that and say if the economy is slowing down, because the whole theme of, oh, now the Fed is going to have to do so much. Well, we'll see about all that. Anyway, so there you have that. And just taking a peek at the futures here. You can see, no big bars, just stall and beginning to pull back, which would be normal. And any pullback into this area, buyers should want to step up, and we'll see what happens, when it gets here. So forgetting this for the moment, because it retraced all the way up there. It didn't take it out. And over the weekend, I thought that would be the ideal scenario. Take it out, poke 4,200 or a little bit more, and then start to pull back, and we get a deeper pullback. So now, what it looks like is, you've got this support point here where buyers stepped up. And, we're looking to the left there. And if it that is lined up there. Yeah, here we go. So if any movement up stays around here and it begins to roll back over, that opens up the door to it beginning to pull back a larger amount today. And there's really nothing here to stop it. But, kind of, okay, minor support there, subjective, but we'll go with it. And we'll duplicate that and kind of, there's some overlapping bars right here. Let's do this so we can see where that is there. And the top of those little topping tails there. So 440, it's in the middle of this bar. That could be normal, maybe a little bit big. And so now with that assessment, I'll look at SPX and see where that is in relation to these bars, which will look a little bit different. And so yesterday we were looking at this as far as would it get down if it was a big day, which didn't happen. Now it's gapping. And let me see what McGraw put down here and what I have written down. So on the upside, I've got 41.65, and McGraw's numbers looked a bit aggressive. 4,005, 1,000. So we got the same top number, and you have 4,005, which I saw as kind of juicy. It shouldn't go down there for sure, but any downside move, I've got 39.90 because I'm a bit of a wimp. McGraw, and that's why you're McGraw. But I figure below 4,000 is a no-brainer. So McGraw's got 44,005. So I think that's okay, because as we're looking at what I just explained, any downside move should stop around 440-ish, give or take, even if it gets a little ugly intraday. So 4,005, you got that big whole number as a line of defense. You've got this minor support. This tail here, this bottoming tail bar, is going to be some support on the intraday timeframes, which you can see on the hourly chart there is right there, which is going to be a pivot on the 15-minute chart. So any move down there should find buyers in that area and to get a bounce from. So should it go down there? The way we want it to go down there is to fall like a rock off the roof. And the juice down here will be tremendous. And so even if it starts inching its way down and you can take your money early on and then put on another trade, if it should accelerate, you go down here and, for round two, but, we'll see. And I said up above 41.65 should be a no-brainer today, considering it's opening up down here. All right, other markets. You can see the NASDAQ is down, beginning to make a turn. A little breakout failure there. Really not a big deal in the grand scheme of things of the daily time frame. And as the week progresses, we'll just see how far this goes or the lack thereof. Same thing on the Dow, up at resistance, look to the left, no brainer. right? Sellers are going to show up in this area. And now we've got the stall and momentum. And right, so if you didn't watch the chart of the week with the stall and the momentum, I thought that was a pretty good lesson to review. I'll find the link for those of you that didn't watch it and do your weekend homework. All right. So a little support there for the Dow to try and hold. We don't look at the diamonds too much. They're kind of a redheaded stepchild as far as trading goes. But gapping, to the bottom of that range there, you see the pivot there on the hourly chart. And we'll see how much that rolls over. Same stall there, holding up relatively well, came back, so that was brought up the rear yesterday, where it was lagging and then it took off and then the Qs and the spiders went down and, then that kind of pulled back and, we'll see where this ends today. You can see the trading range that's going on here right now for the moment. So kind of running in place. And so unless it breaks down below here, it's just jiggling back and forth. Bitcoin yesterday, we talked about the fact that it didn't participate much at the end at last week and, didn't clear those highs. But this looks to me like the spring is getting wound. Something's going to happen. It's getting tighter. The ranges are getting tighter. And, send an alert. Which way this thing's going to go. Crude oil's on support. And a wide range bar down yesterday. And flipping back up, it is on this 200 MA, and this is really at a critical point as to what it's going to do here. You see that pivot, and it's created a trading range. So I would just set an alert down here, and if you don't have the futures, just use USO. It's close enough for government work, and put an alert down here or up above this this high. BP had a nice overnight run. Oh, the one that made the ocean out of a toilet. I'm not filling in here. E-Signal says I got to shut some of these pages. Why this thing isn't filling in as fast as it should. It's usually the symbols that I don't use. Takes a while for them to populate. 30. Yeah, that's a nice little pop up there. Yeah. All right. And silver, as the dollar began to pull back, it's stalling, now it had a nice little run up in gold as the dollar. You might remember from prior videos where some were asking about, what's gold doing in inflation. And I mentioned, look, gold and silver aren't going to do a damn thing until the dollar starts pulling back. And so this is a great example of, okay, this is what I was saying, the theory. Now you see the reality of what happens as the dollar begins to pull back, how gold and silver reacted to it. Now, as the dollar comes down to the support level, it begins to hold, odds are gold is going to stall and it's at resistance. So, and that all makes sense. And if you're trading the euro, the dollar starts to pull up. This is at this pivot high. This is going to begin to pull back. It's kind of got a mess here, but that's how you use those intermarket relationships to help you guide some markets. What is one market doing and what's in its effect on other markets? And so transports, they made their move and they've got a void above. So with that up there like that, I don't know any of these, whether they're reporting earnings or not, but you'd want to look at things like this. Look, CXX is gapping down here. I don't know if it reported earnings, but day trader short, bear call credit spread. If there's juice, days to expiration, maybe JB Hunt, JBHT. Pretty extended, a nice extended run. It broke this on the weekly time frame. That's nice. But, see, you see an index that's extended starts to correct. If you're a short-term trader, it opens up opportunities, especially if something in that index is already turned red when the index didn't. That's where you could go look for day trading shorts. Not necessarily swings, because this has shown some really great strength, and that's a positive. So looking at others, whatever, UAL, airlines, that's kind of a bottoming pattern, but where's it gapping down to? Not that bad, but that's the thought process that you want to go through. It's basic stuff, but it's good stuff. And it's the basics that works day to day to guide you through the markets. And I'll repeat it again. You put all the indicators on there and trend lines and fib lines and all that, and before you know it, you need some Tylenol and getting more crazy. So take it away, Dan.
Good morning. We have a ton of earnings here. Yeah, Pelosi going to Taiwan tonight, China doing their saber rattling now. So that's given us an excuse to get a nice little turn here. But I have a big list of things that we can look at. We actually, in the green room, we did a couple of earnings trades. We've been doing that lately. Pins, we actually did a Condor, the 24s, and they actually had stinky earnings. And then the news came out, I think Elliott Management, a VC firm, having a big stake in him, just like they do when Buffett comes out and says that. And the stupid stocks just rally on that news. And then we have the 16 put spread. And so that's what a Condor is, just stay in between. So even with this big 15% gap, I'm pretty darn confident we're going to have an open gain. So I'll be quickly looking to, maybe take profits or at least on the put side, because that should be pennies to close the put side out, and then maybe, I don't know, 5-10 minute high on the call side. I'll play it by ear. McGraw and I did a couple others. Car we gave subscribers, that's gapping up. We got the naked 135s, so we should get beautiful contraction and volatility. We're bidding 10 cents to get out. ZI, we did, or I did. I told people what I've been doing here, so that's going good for me. CAC, it shows it up 18 bucks, but I don't see any pre-market volume. I did the 460s. I did IT up 18. So that I'm bidding a dime to get out. And Uber, I did the 21s. So the streak continues. Those are all good. I tried a number of others, but I didn't get filled. Let's go through this list first before I look at others. I do this every morning, particularly during earnings season. And a number, I'm labeling them a put spread idea, but I also publish a number of directionals, like Vano. Look, that's a beautiful directional right there. It's beautiful. Bottoming pattern, gapping up. ZBH, we mentioned yesterday, all these tails didn't want to go lower. That's on my long list. MPC, oil is gapping over this. I gave it 10-minute high. We'll do a put spread. This is a big complex bottom. You got a double bottom here. You got an inverse head and shoulders. Left shoulder, you got two heads. What Gustavo calls a Medusa head and shoulder. And you got a price order. So that looks great. Wilk, I mentioned Wilk. Yeah, here's another one, bottoming pattern. So today's Tuesday over Friday's high. That's a long. INMD, Thomas. Well, Thomas, yeah. Well, you got two problems. You got a couple problems, Thomas. Number one, the 1, 2, 3 already triggered. Number two, it's far from the 20. Number three, it's gapping down. So I have zero interest in that right now. All right, so this list I just posted, let's go through these first. Hun over Friday's high, it's a put spread. ATVI, more like 30-minute high. It's extended here and just bobbling around in a wide range, but weekly has room. Aflac, gap in the 58, on a pullback maybe. A Saber, another bottoming pattern, 30-minute high. Wilk, I mentioned, TGH. I put this in the wrong column. This is a call spread candidate. All right, I totally put TGH in the wrong space. When something rallies this much into resistance, I'm looking for a gap and crap. Tap. All right, I couldn't tell the gap earlier, so now, all right, so now strike that one off the list. MPC we talked about. Marriott gapping up, 30-minute high, put spread idea. Bravo Papa. Yeah, another gap breakout from a big bottom. WWD. Now this one's gapping down to 91. So this is a nasty gap, but it goes in my category of space here. I'm running in the category of, is the gap so big that buyers might want to step up? Yeah, I don't care about ticks, Stephen. If it's not liquid, I've been trading so long, this thing could open up at 95. So just totally disregard it. All right, those are all the bull ones. So actually I have more bear ones. So look, things that rally like this. Look, if this is, I said, if, Stephen, if this is gapping up to 95 bucks, then you can day trade short 30-minute low out of the money call spread. But that is a powerful reversal on the monthly. But you need a pullback on the daily weekly. DVA. DVA, I see nothing here. RRX. All right, I don't see a gap, but at this, I would love this to gap to 140 or higher. And then same strategy, 30-minute low. Zebra. Same, I see one print, 393. If it does gap up there, same, 30-minute low. And out of the money call spread. Now this is just a vanilla sell setup right here. SWI, sell setup, reversal, breakdown, weekly. That just looks horrible. But it had earnings also. ANET 124. I mean, it's bullish. But these are just counter trend trade ideas if they set up, since the gap is excessive and it ran into earnings. KKR, same, bigger the gap, the better. KBR, we'll come back to you. ITW. All right, see, this one was up at 210, and now it's at 202. So it's just a different type of gap trade. it's still a bear call credit spread candidate. So McGraw and other option traders, I'm going to need help here this morning on some of these climbos to, well, both bull and bear. I'm pointing out the ones I like here, like the most. HRMY. No, this. Okay, I guess I didn't see it. Yeah, I didn't see the gap. I thought it was gapping under this, so strike that one. CNP, bigger the gap up, the better. AME, bigger the gap, the better. I see a print at 131. That would be great. All right, see, I had an order pre-market, so I guarantee you I got filled at 10 cents on one of these profitable ones. All right, AME, wow, that is a big old gap. All right, so 30-minute low. All right, we do. I mean, our pins is showing a midpoint of 47. I actually thought it would be more than that. 42 now, and it's falling.